Rajesh Kumar, Sukhija Accounts Teachings. Important points to be kept in mind while solving questions on admission of a new partner. Before solving the problems, you should keep in mind these important points. Number one, go through the question thoroughly. Before solving the question, it is your paramount duty to go through the question thoroughly. Number two, calculation of sacrificing ratio. That is after admission of partner, what is the sacrificing ratio of the old partners for the new coming partners? That is to be calculated. Then third, accounting treatment of goodwill. Whether the new coming partner is paying goodwill in cash or it is raised. Now it will depend upon the question. Whether the new coming partner has paid his share of goodwill in cash or the firm want to raise goodwill account. When he pays goodwill in cash, it is transferred to old partners in their sacrificing ratio. But when goodwill account is raised, goodwill is transferred to old partners in their profit sharing ratio. In that case, we write goodwill account debit to A's capital to B's capital. If he is paying goodwill in cash, cash account debit to premium, premium account debit to A's capital to B's capital in their sacrificing ratio. Then fourth, revaluation of assets and liabilities. Whether assets and liabilities have been devalued or not. It depends upon, like in old balance sheet, machinery is 20,000. He says it is to be reduced to 16,000. It means machinery has decreased by 4,000. Or new machinery has been valued at 16,000. It is the same thing. But if he says that depreciate machinery by 10%, then 10% of 20,000 would be 2,000. Machinery has decreased with 2,000. 2,000 we will show in devaluation account and in balance sheet on asset side. From machinery 20,000 less depreciation 2,000, we will show 18,000. Same way you have to check for liabilities whether they have increased or decreased. If the liability has increased, like he says outstanding expenses amounted to rupees 5,000, it means liabilities have increased. And or creditors are to be reduced by 10%. Creditors are 30,000, he says that you reduce it by 10%. It means creditors has been decreased with 3,000. So we will have to check for revaluation of assets and liabilities. And we will have to prepare revaluation account. If it is revaluation profit, that is credit side is more than the debit side, then it will be transferred to old partners in their old profit sharing ratio. If the debit side is more, it means it is revaluation loss. This will also be charged from old partners in their old profit sharing ratio. Fifth is accounting treatment of general reserve or reserve fund. Carefully check that if on liability side any general reserve or reserve fund is appearing, that is part of the profit which the old partners have kept for future contingencies. So this will be transferred to old partners in their old profit sharing ratio. If it is general reserve account debit. If it is reserve fund account debit to old partners capital account. Goodwill appearing on the asset side of the balance sheet. If any goodwill is appearing on the asset side of the balance sheet, that is to be charged from old partners in their old profit sharing ratio. Like old partners are X and Y. X capital account debit, Y capital account debit to goodwill. Goodwill appearing in the balance sheet, written off or closed. Next is seventh, whether in question only journal entries has been asked or only ledger accounts or both. You check in the question whether you have to be asked only make the journal entries, then give the journal entries only. Or if you have been asked to show only ledger accounts, then you have to show the ledger accounts. Or if you have been asked to give both, then with journal entries you have to prepare ledger accounts also. Regarding balance sheet, if you ask give the balance sheet also, you prepare. If not asked, you need not to prepare. But from balance sheet we can find out whether our question is correct or wrong. 8th, give proper working notes. Where working notes are required, like you have to calculate new profit sharing ratio, gaining or sacrificing ratio, or cash account or bank account. In that case, we will have to prepare proper working notes. Then 9th, accounting treatment of workman compensation. Workman compensation fund is which we have kept for the workers, that during working, if they meet any injury or any other reason, they have to lose the job, so they are paid from workman compensation. It is like other liabilities. If it increases, you have to write on the debit side of revaluation account. If it is decreases, you have to write on the credit side of the revaluation account by the amount it has increased or decreased. The next is preparation of other necessary ledger accounts where desired, like cash account, bank account, goodwill account, workman compensation account. If he asks you that also show the necessary other ledger accounts, then you will have to prepare all affected ledger accounts. Cash account, bank account, goodwill account, workman compensation fund account. Then marks allotted to the questions. That how much are the marks for the questions? Because naturally the student is expected to do that according to the marks allotted. Then fourth, closing of ledger accounts, whether he says or not. If he has asked for ledger accounts, we will have to close the ledger accounts and the final balance will be shown in the balance sheet. Requirement of balance sheet. It depends upon the question whether he has asked for the balance sheet or not. Sometimes he asked, give journal entry and show the balance sheet. In that case, other journal accounts will be prepared in the working notes. Because without preparing capital accounts, goodwill account or cash account or bank account, we cannot prepare the balance sheet. So therefore, if in the question you are asked give journal entries and show the balance sheet, so it means you have to show capital accounts and other ledger accounts in the working note only. If you like this video, kindly like, share and subscribe it. Thank you very much.